Guys, good morning. Good morning. Believe you can hear me. How is your day going? How was a Monday? Hope you made some good profit and you're still hoping to make more profit this week. I pray that this week shall be a profitable week for every one of us. We just advise that you stick to your trading plan. No matter what happens in the market, ensure you execute your trading plan. If you don't have a trading plan, you have planned to fail. No business succeeds without a plan. You have to treat trading as a business if you want to succeed in trading. It's very important. You're welcome. You're welcome. You are welcome. You are welcome. So we'll go straight to business. Okay. If there's any pair you want us to analyze, if you have any question, just drop it in the comment section. Drop it in the comment section. My first trade for the day is Australian dollar USD. I'm currently bullish on Australian dollar USD, as you can see. If you joined the weekly market outlook session, I told you guys on short term, Australian dollar USD is bearish, long term it is bullish, and I expected the pullback yesterday. I expected a pullback on Australian dollar yesterday. It's actually pulled back, but it did hit my TP. It didn't get to where I expected it to get to. Okay, so I had to close that trade at a little profit as I saw that the price was changing its direction. So I had to exit the trade. So this week my bias on Australian dollar USD is bullish. My bias on Australian dollar USD is bullish. Technically, as we can see on the chart, you see how the previous week's candle closed. You can see it closed as you can see we have AMA there, which indicates change in trend from bearish to bullish, and you would see that that AMA formed at a previous resistance, which became a support. So you can see price has tested that level 2 times, and there's been a lot of rejection from that level. That is the reason my bias for the week is bullish. Okay, so let's see what's happening on lower time frame at the moment. Let's go to daily. What's happening on daily? So you can see on daily, this is what I considered on the daily. I think this move here was sweep on liquidity. That was my thoughts. This move here, this breakout was to clear liquidity at this previous low that they have achieved. Now this candlestick, this bearish candlestick, okay, that broke this low. You can see that market is currently trading above the high, and a resistance formed after the formation of this bearish candlestick. We had a resistance here, as you can see, and the market is currently trading above that resistance and also trading above the high of this bearish candle that was used to clear liquidity at this previous low. So you can see today's candle, even yesterday candle tested this high or tested the resistance. And today's candle also has tested that level, and you can see there's a strong rejection from that level. Now if we go down to lower time frame, we want to confirm the candlestick pattern that formed on lower time frame. Let's go to 4 hour. So you can see the candlestick pattern that formed. Can you see? This is a reversal pattern. This is a spinning bottom, hammer, spinning bottom, hammer. So if you're yet to execute a trade, you might want to wait for price to break, let's say, above this high of this candle before this reversal patterns was formed. Okay, so if you're yet to execute a buy trade on Australian dollar USD and you're okay with the risk, okay, you should patiently wait for price to close above the high of this bearish candle. I think this bearish candle was to clear liquidity at this previous low. Okay, that's my thoughts. So you need to wait if you've yet to execute a buy trade. If a candle, let's say 4 hour or 1 hour closes above the high of this bearish candle, as you can see, we had a resistance here. So if that resistance is broken, that will be a strong confirmation to buy. That will be a strong confirmation to buy. Good morning, Ifeanyi. Good morning, Mr. Olodu. So that's my take on Australian dollar USD. Let's move to the next pair. I hope that is clear. If there's any instrument, any pair you want us to analyze together, drop it in the comments section. Okay, let's move to the next pair. Euro USD, as you know, is positively correlated with Euro USD. So let's start with the weekly time frame. Let's start with the weekly time frame. So you can see the pattern we had. You can see the pattern we have here is similar to what we have on. You can see it's similar to what we have on Australian USD. You can see. So we had a doji. That's 4 weeks ago, and you can see the next candle has closed bullish. For those of you who trade candlestick pattern, you know after the formation of a doji, we wait for the next candle to close bullish before we execute a buy trade. And last week candle closed bullish. Not just that it closed bullish, it closed above the high of the doji. It closed above the high of the doji. So that tells us that we have more demand than supply. If you also go back, you would see this level was a support. Can you see? At this point, it was a support, and price has tested that support several times. Can you see that? Price has tested that support several times, and there has been strong rejection from that level. You would only consider selling. Our buyers on Euro USD will change from bullish to bearish if this support is broken. That will be the right time to consider selling Euro USD. But at the moment, going by the pattern we have on the chart, Euro USD is bullish. It is bullish at the moment. Okay, it is bullish at the moment. Okay, so let's see the pattern we have on daily and 4 hour after the close of last week candle, because last week candle looks like a shooting star, right? So let's see the pattern we had on daily after the close of last week candle. Okay, so we had a shooting star last week. We had a shooting star. Then let's go to 4 hour. So on 4 hour, you can see we had what looks like an engulfing pattern, right? This is an engulfing pattern. This candlestick closed below the low of this shooting star. So this is an engulfing, and price with this pattern, one would have considered selling. One would have considered selling, okay? But right now with what we have here, this is a bullish structure. If you look at the structure, for those who were in the live session yesterday, if you're in the office yesterday, I told you guys that the structure we have on Euro USD is bullish structure, but I was expecting a pullback, a bearish move on Euro USD yesterday, but it didn't play out as expected. It didn't play out as expected. So with what we have here, this is a bullish setup at the moment, but if price pulls back and closes below the low of this shooting star, if a 4-hour candle closes below the low of the shooting star, the bias has changed from bullish to bearish. So if you decide to buy Euro USD from the current market price, your stop loss would be few pips below this level, which is like 30 pips. I hope you're getting me. If you decide to buy Euro USD, your stop loss should be few pips below this level. The way I see it, there is a high probability that Euro USD will aim for this previous high. You know, there is liquidity at this previous high, so it's possible they will aim for this level, okay, before pushing price down. They would even push price above this level, few pips above this level, or it will even go far above it. So that is my expectation on Euro USD. I hope that is clear. I hope that is clear. I want to see your comments. If you can hear me, I want to see your comments. I hope that is clear. So we are bullish on Australian dollar USD, bullish on Euro USD at the moment. Okay. So let's move on. Let's move on to the next pair, GBP USD. You can see the structure we have on GBP USD is bullish. This is a bullish structure on Euro USD. So let's start. Let's see what we have on the weekly time frame. So if you look at the weekly, you can also see that the pattern we have on GBP USD is similar to what we saw on Euro USD and Australian dollar USD. That tells you that these pairs are positively correlated. It tells you that these pairs are positively correlated. So you can see what we had here. We had an hammer, spinning bottom. Then last week candle closed bullish. You know, if you have an hammer and a spinning bottom, you wait for the next candle to close bullish before you buy. Last week candle closed bullish. And you would also notice that, look at the several candlestick pattern that are formed here, indicating that the trend is likely going to change from bullish to bearish. And you can see a lot of stop losses at this level. So I believe they want to clear the liquidity at this previous highs. This previous high. I think they're going to clear liquidity at these highs before pushing price maybe down. So at the moment, GBP USD is bullish. GBP USD is what? Bullish. We should only consider selling if this support is broken. If this support is broken, that will be the right time to consider selling GBP USD. But with the pattern we have on the charts now, GBP USD is bullish. Good morning, Mr. Eze. Okay, so that's my bias on GBP USD. It's bullish. I believe they want to clear liquidity at this previous high. They want to clear liquidity at this previous high. That's my expectation. So if you are buying, your profit target should be at these highs. Use one of these highs as your take profits. Let's move to the next pair. If there's any instrument you want us to analyze together, drop it in the comment section. The next pair is USD card. As you know, if GBP USD is bullish, USD card will be bearish. Both currency pairs are negatively correlated. Okay, 70 to 80% of the time, if GBP USD is bullish, USD card will be bearish. Now let's see how last week candle closed. You can see this candle. This is a shooting star, right? This is a shooting star. Then the next candle, last week candle closed. You can see last week candle closed as a spinning top. If today's candle closes bearish, or this week candle closes bearish, we should expect more bearish move on USD card next week. If this week candle closes bearish, okay, you could also say that this shooting star that formed, this shooting star that formed there, you can see it tested this previous resistance level. Can you see that? It tested this previous resistance level. You can see. So after the formation of that shooting star, let's go down to 4 hour or daily first. So you can see the pattern we have on daily. This is the pattern we had on daily after the formation of that shooting star. This is the pattern we have on daily. You can see that. So price tested the low. I want you to take notice of this. The low of this bullish candle. Price tested it, and there was a strong rejection from that level. So what we should wait for is breakout from this level. Okay, you can wait for price to break, let's say 1 hour or 4 hour closes below this level, or if you want to execute a trade now on USD card, you have to work with 4 hour and 1 hour time frame. So look at how yesterday candle closed. What candlestick pattern is this? Is a shooting star, right? This is a shooting star. Now, if you go back here, you would see that this level was a support, resistance. You can see it was a resistance. So price tested this resistance yesterday, and there was a strong rejection from that level. So after the close of this shooting star on daily, what pattern do we have on 4 hour? If we go down to 4 hour time frame, and we can identify a bearish reversal pattern on the 4-hour time frame, then we should expect a more bearish move on USD card today. So let's go down to 4-hour. What do we have on 4-hour? So you can see the pattern we have on 4-hour. So we had a support here. This was support for yesterday market. Can you see it? This was the support for yesterday market. And you can see that the market is currently trading below this support. That tells me that supply has exceeded demand. That tells me supply has exceeded demand. And when supply exceeds demand, what happens to price? Price is expected to drop. So I'm bearish on USD card. So if you're considering selling USD card, your stop loss should be around this level or a few pips above this level. And your TP, your first TP, will be the next draw on liquidity, which will be this old low, this previous low. That's my take on USD card. Now, today we are expecting major news from the United States by 2:30 and by 4 p.m. That could be the major or the main driving force of price today. It's likely that will be what will inject volatility into the market today, okay? But technically, what I'm sharing with you is technical perspective, okay? Technical perspective. So technically, USD card is bearish. It is bearish. And that is why I said if you are selling, your stop loss should be a few pips above this level. I hope you get that. I hope you get that. Okay, let's look at gold. I hope that is clear. Let's move to gold. Gold. Gold should be bullish also. Gold is still bullish. Gold is still bullish. If you look at the structure we have here, this is a bullish structure. You would agree with me. It is a bullish structure. This is a bullish structure. Gold has been, this is an high, low, higher, low, higher, low, higher high. So this is a bullish structure on gold. So it's like going to form a new higher high. That's my expectation on gold. Okay. Yesterday I took a sell on gold and I made close to 50 pips on gold. I was expecting a pullback yesterday and it played out. It pulled back a little. Then I made some good profits from it and exited. Okay, because I knew the bias for the week is bullish. I knew the bias for the week, the trend for the week is bullish. Okay, so that's my take on gold. Gold is still bullish at the moment. Gold is bullish at the moment. We cannot sell gold at the moment. Let's see what we have on 1 hour time frame. Okay, it's still bullish. My bias on gold is still bullish. As you can see, I believe there was a shift in market structure. Yeah, there's a shift in market structure. This candlestick closed above this high. So after a shift in market structure, we'll wait for price to pull back. You could apply your Fibonacci too. So we could see price pull back. Okay, apply Fibonacci from this swing low to swing high. You want to see price pull back to discounts before you buy. Okay, it's a probability. It's not certain that it will pull back. Okay. Okay, so if I'm to execute a trade right now on gold from the current market price, if I'm to buy, my stop loss would be around this level. My stop loss would be around this level. So I want to calculate the risk. If I 366,297, that's about how many pips? 70 pip risk. If I decide to buy gold at the current market price, the risk will be about 70 pips, and that risk is too high. So I can't execute this trade right now until price pulls back to, let's say, 50% of the Fibonacci level. That is when I would consider buy gold. I can't buy at the current market price. I hope that is clear. So my bias on gold still remains bullish. I hope that is clear. If there's any pair, any instrument you want us to analyze together, drop it in the comment section. So short term, for those who scalp, you might want to scalp gold. You might want to go for a sell. If you're a scalper, you might want to go for sell, but I do not advise trading against the trend. Okay. I do not advise. For short term, gold is bearish. You can go for like between 30 to 50 pips on gold, selling gold. But I'm waiting for a buy setup on gold. That's what I'm looking out for. I hope that is clear. Mr. Oludu, I hope that is clear. If you have any question, drop it in the comment section. Let's look at USD CHF. I think USD CHF is USD CHF is amen, Mr. Eze. Thank you. USD CHF. Let's start with the weekly time frame. Okay, so you can see USD CHF. You see how last week candle closed? It was a doji. The previous candle closed as a spinning top. The next candle closed doji. Let's go down to daily. So doji indicates change in trend, right? From bullish to bearish. And you can see that doji formed at a previous, you can see the doji formed at a previous resistance level. Can you see that? Doji formed at a previous resistance level. Then this shooting star, you can see what happened. Tested this support. You can see it tested this support, turn resistance, and there was a strong rejection from there. And last week also could not hit this high. You can see doji indicating change in trend. So let's go to daily and see the pattern we had on daily. So you can see the pattern we had on daily. You can see this is a shooting star. You can see. So this is a bearish setup. This is a bearish setup on daily time frame. If you also look at how yesterday candle closed, looks like a shooting star, right? A shooting star, right? Can you see how yesterday candle closed? Can you see it? So let's go down to 4 hour. After the close of yesterday, what time do we have on 4 hour? So you can see, and with what we have here, this is a bear structure, right? This was a low, higher, lower high, formed a new lower low. Can you see that lower low? So it's likely it's been respecting previous highs. It's respecting previous highs. You can see that it's respecting previous highs. So it's likely going to form a new lower low. You can see that. So that's my expectation on USD CHF. I am bearish on USD CHF, but if this resistance is broken, then we should expect more bullish move on USD CHF. If this resistance is broken, in as much the market is still trading below this resistance, the bears are still in control. The bears are still in control. I hope that is clear. Okay, let's move to the next pair. Which other pair? Okay, let's look at USD JPY. Let's look at USD JPY. I think USD JPY is bearish. I think USD JPY is bearish. Let's start with the weekly time frame. Let's look at the weekly time frame. So you would see last week candle closed as a spinning top. It closed as a spinning top. Now, based on the pattern we have on the weekly candle, on the weekly time frame, we have to wait for the weekly candle to close. That's this week candle, for us to confirm that we have sellers in the market, for us to confirm that supply has increased. Okay, we're supposed to wait, but we cannot wait for the weekly candle to close. We are not swing traders, right? We are day traders. We are not swing traders, so we don't want to wait for the weekly candle to close before we decide to buy or sell. That is why we use daily, 4 hour and 1 hour time frame. So let's go down to daily. Let's see the pattern on the daily. So you can see the daily. Now, the same pattern, let me go back to the weekly. The same pattern we are waiting to see on the daily time frame, which is waiting for this week candle to close bearish before we sell. If we go down to the daily time frame and we can find that pattern on the daily time frame, there is no need waiting for the weekly candle to close, right? Because we would assume the weekly time frame does not exist. Let's just assume what we have is just the daily time frame. We are not seeing what is happening on the weekly time frame. So if we go down to the daily time frame and the same pattern we're supposed to see on the weekly time frame, we already have it on the daily time frame, there will be no need waiting for the weekly candle to close, because if you wait for the weekly time frame to close before you execute your sell or buy trade, the risk on that trade will be very high. And as a trader, the key to successful trading is your ability to minimize risk. It's your ability to catch the trend at its early phase. Do you get it? That's the secret to successful trading. You want to ensure that your risk is less than the reward. You want to ensure that your reward is at least 2 times the risk. Do you get it? That is why we go down to lower time frame. That's why we use lower time frame for entries. Okay? We define the trend on the higher time frame. We go down to lower time frame to find best areas of entries. Okay, so let's go to daily. So you can see the same pattern we are waiting to have on USD on weekly. You can see it, we have it here already. This was a spinning top. The next candle also closed as a spinning top. So today, if today's candle closes bearish, we should expect more bearish move on USD JPY this week. That's my take. If today's candle closes bearish, we should expect a more bearish move on USD JPY. Now, if today's candle closes bearish, a new resistance will be formed, right? A new resistance will be formed. Now, this is like a double top. If today's candle closes bearish, a new resistance will be formed, and this is a double top pattern. I hope you get that. This will be a double top pattern. So if today's candle closes bearish, I would be selling USD JPY all through the week. I will be selling USD JPY. So let's go down to 4 hour. So you can see the pattern we have on 4 hour. You can see what we have on 4 hour. This is a bearish setup. Okay, I think that bullish move we saw yesterday was to clear liquidity at this previous high and also at this previous high. That's what I think played out yesterday. This bullish move we experienced yesterday was to clear liquidity at this previous high. That's what they have achieved, because a lot of retail traders will see this as a double top, right? A lot of retail traders will see this as a double top, and they would have executed sell, and their stop losses would have been around this level or a few pips above this level. So I believe they've cleared those stop losses. And you can see after they achieved that, what happened? Price started dropping. And you can see at this point, there's a shift in market structure, right? There's a shift in market structure at this point. Some will say there's a breakout from support. Okay, shift in market structure occurred here, breakout from support. So if the current 4 hour, okay, 4 hour closes below, if the current 4 hour closes below these lows, that's a shift in market structure. And after a shift in market structure, you want to see price pull back to premium level. So let's just assume the current 4 hour candle has closed. Let's assume the current 4 hour candle has closed. You can take your Fibonacci 2, apply it from the swing high to the swing low. These are swing low at the moment, but you have to wait for the candle to close before you identify that as your most recent swing low. I hope you get that. So you wait for price to pull back to premium. There's a fair value gap above. This is a fair value gap. If you were to use 4 hour, this is a fair value gap. Okay, you want to see price pull back to fill this fair value gap. That is where I'll be considering selling USD JPY. Price pulls back into this zone, this fair value gap, I'll look out for a bearish reversal pattern to form in that zone. Okay, a bearish reversal pattern must form in that zone. That is when I will sell USD JPY. I hope that is clear. Yes, USD JPY. We are on USD JPY. So wait for price to pull back. I could have jumped in and start selling, but if I sell from this point, 150.24, my stop loss will be around, let's say 10 pips above this level. That will be 150.94. 150.94. That's about 70 something pips. That risk is too high. That risk is too high. But if price pulls back into this zone and I execute a sell, let's say from this point, my stop loss is 10 pips above this level. That will be around maybe 30 to 35 pips, which is a good risk to take on a trade. Okay, 70 pips is too high for me. I don't take that kind of risk. So I'll patiently wait for price to pull back and fill that gap before I would sell. I hope that is clear. I hope you get that. Which other pair? Which other pair? Which other pair do you want us to look at? Okay, let's look at Euro Australian dollar. It's one of my favorite pair. Euro Australian dollar is bearish, as you can see. You can see what is playing out on Euro Australian dollar. My bias is bearish. You can see the candlestick that formed here. You can see this candle that formed here, this shooting star. You can see. I think what happened there was clear on liquidity. You can see this previous high. That's the reason price had to push up. You can see what they did today, early hours of today, was to clear liquidity at this previous high. That's what I think played out. They hunted for the stop losses at this level, and the candlestick that formed at that level is a shooting star. You can see even before that shooting star, you could see that we had a spinning top here, right? A spinning top formed here, and a lot of retail traders would have jumped in. The impatient traders would have jumped in to sell, and their stop loss would be at this level. Some would have entered sell after this. Their stop loss would be at this level, or a few pips above that level. So what they did was to hunt for their stop losses before pushing the price down, before they went bearish. So right now, Euro Aussie is bearish, but this is not the right time to sell. I would not advise that you take a sell on Euro Aussie. You can see that price has already moved. You should have entered sell after the close of this bearish candle, and now price is about 30 pips from that level. So you should wait for price to pull back. That's what I will advise on Euro Aussie. Wait for price to pull back before you sell Euro Aussie. So wait for price to pull back, please. Let's go to 1 hour. Let's see what we have on 1 hour so you can see. So I will advise you wait for, there's a fair value gap that was created here on, can you see this fair value gap? This fair value gap, can you see it? Which is the gap between the low of this bullish candle and the low of this bearish candle. This is the fair value gap. The low of this bearish candle and the high of this candle. That's the fair value gap. So wait for price to pull back to this zone before you sell. That's my take. This will be the best area to sell. And if you are selling from this zone, your stop loss will be at this level. Then your take profits could be at this level. Okay, so you'll be risking, let's say, like 30-40 pips for a profit of close to 130 pips. So patiently wait for price to pull back into that zone before you execute a sell trade. Let me see what's happening on Australian dollar USD. I took a buy on Australian dollar USD. Okay, I'm still in profit on Australian dollar USD. Okay, let's see how it plays out. If it successfully breaks out from this resistance, this high, then we should expect, if it breaks out from this high, then this will be the next target. This previous high will be the next target. I hope that is clear. Any question? Any question? Any question? Any question? You have any question? Drop it in the comment section. Do you have any question? If you have any question, Mr. Olodu, Ifeanyi, Mr. Eze, Wisdom, do you have any question? Someone is asking, okay, Wisdom, German 30, few minutes, I will need to add that to my list. I don't think I have it on my list at the moment. Few minutes. German 30. Few minutes. few minutes. Let me search for German 30. Let me search for German 30. German 30. Okay, let me see. DAX. I can't find German 30. I can't find German 30 here. It's supposed to be on this list. It's supposed to be on this list. Let me check this. No. Can't find German 30 here. Okay, a few minutes. I can't find German 30. I don't trade. German 30, German 30. I'm sorry, I can't find German 30. Can't be on commodity. Okay, it's not on this list. It's not on this list. If you have any other question, please drop it in the. I can't find that. Unless it has a different. Okay, could it be this German Tech 30? I think that's it, right? Wisdom, I think that's it. Wisdom, I think that's it. This tech, German Tech 30, I think that's it. Right? Wisdom. German Tech 30 index. I think that is it. I think that's it. Okay, let me analyze. Let me see what's that's likely going to be it. Take the 30 open chart. Okay. Okay, let's start with the weekly. How do you guys trade this pair? I can see a lot of whipsaws, a lot of whipsaws. How do you trade this? I see a lot of whipsaws on this pair. Okay, let me see weekly. With what we have on the weekly, this is a bullish setup. Okay, this is a bullish setup. Price tested this previous resistance. You can see this is a resistance that became a support. That price has tested this zone. You can see price has been struggling around this zone. It has tested this zone several times and has not been able to break out from this zone. Also, this previous low has not been cleared. It has not been cleared. So this is a bullish setup on D30. This is a bullish setup. Okay, this is a bullish setup. This is a bullish setup. There was a shift in market structure here. You can see shift in market structure. So this was a pullback. After a shift in market structure, pullback. You can see. So this is a bullish structure. This is a bullish structure on. Let's go to daily. Okay, so this is a bullish structure. This is a bullish structure. This pair is a very It's a very volatile instrument, very volatile instrument. And I can see just by viewing the daily charts, I can see that there's a lot of whipsaws on this. This is an instrument that a newbie trader should be trading. Okay, this is not for a newbie trader. This will take a lot of experience for you to be able to trade day 30. You need to have a lot of experience. Okay. Any other question? Any other question? Any other question? If there are no questions, I would have to end the session. How is your trading going? I hope you're making progress. I hope you're making progress. Get serious with your trading business. Be diligent in your business. Okay, ensure that you study, 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 study. Learning is continuous in this business. The day you stop learning is the day you begin to lose passion. When you start losing passion, you begin to lose money. For you to be a successful trader, you have to be passionate. You have to be very passionate. Know why you ventured into trading. Know why you ventured into trading. The reason we trade Forex is to attain financial freedom, time freedom, and location freedom. Always remember, always remember why you started trading. There are a lot of people around you that will discourage you, that will tell you this won't work. And most of the people that will tell you this won't work are people who have never taken any risk in their life. They've never taken any risk. They've never traded Forex. And most of them, they've settled for the average life. They are okay with the 9 to 5. They are okay with the rat race. They've accepted that as their way of life. But there is a higher life. There is a higher life. There is a life that is beyond the rat race. And that is what we are chasing. That is why we are trading Forex. Always remind yourself. Always remind yourself. It doesn't matter the number of losing streaks, number of accounts that you have blown. That shouldn't be a reason for you to give up. Okay? There is no successful trader you would see today that didn't experience losses when they started. You should learn from your losses. Learn from your losses. Okay? We do not lose in the Forex market. We do not lose money. We only learn. Take your losses as training. Okay, learn from your losses. You would not make progress if you don't learn from your losses. The reason most people keep losing in the market is that they don't learn from their losses. When you make a loss, you should review that trade, know why you lost on that trade, and ensure that that does not repeat in the future. That is how you grow. That is how you grow. Most people just lose money and they just ignore. They don't even do a review to know why they lost on that trade. And that's why many people are just at the same spot. They are not making progress. Okay. So I appreciate you all for your participation. If you're not on the WhatsApp group, please send me a message on WhatsApp so that I can add you to the WhatsApp group. And if this is your first time participating in the live stream, please ensure you subscribe to the channel so that anytime I come online on YouTube would notify you. Okay, and anytime I drop a video, YouTube will also notify you. So ensure that you subscribe to the channel and also share the link with your loved ones. Share the link with your friends, those who are interested in learning how to trade. Don't let them pay thousands of naira to go learn how to trade. Most of the things they won't teach them in those classes would be basics. Let them come and learn for free. Okay, so our next session will be tomorrow by 10 a.m. I look forward to having you in that session. Please, if you have a question, if you have any challenge in trading, do not hesitate to ask questions. Do not hesitate to seek for help. Seek for help if you are going through any challenge. There's nothing you're going through that you're experiencing in trading right now that I've not gone through. I've been there. I've been there. Okay, so always share your challenges. Most times when people are losing money, when they are failing in trading, they are ashamed to share their experience with someone, with their mentor. Most people, don't be that person. If you have a challenge, Seek help. Seek help. Seek help from those who are experienced, not those that started the journey together. Those who are ahead of you. Those are the people you should seek help from. Okay. So I wish you guys a great day. A great day. If you're not on the WhatsApp, send me a message on WhatsApp. Let me add you to the WhatsApp group. Bye for now. Bye for now. Bye for now. Bye for now. Yeah, we've looked at Euro USD, Mr. Adamu. We've looked at Euro USD. Euro USD is bullish. Euro USD is bullish. Euro USD is bullish at the moment. It is bullish at the moment. It is bullish at the moment. Okay, it is bullish at the moment. You only consider selling if this low is cleared. If Euro USD closes below this low, then you might consider selling. But right now, it's bullish. Okay. Bye. See you guys tomorrow. Please like this stream. If you're yet to like this stream, like the stream.